There is a number shaping almost every financial decision you will ever make in Australia. It decides whether you get approved for a home loan, what interest rate you pay on your car, and in some cases, whether a landlord even lets you rent their property. Most Australians have no idea where they stand, yet the gap between a good score and a bad one can cost you tens of thousands of dollars over your lifetime. To understand where you fit, you first need to know that as of 2026, Australia has two main credit reporting bodies, Equifax and Experian. These agencies use different scales. Equifax scores range from 0 to 1200, while Experian scores range from 0 to 1000. Because their algorithms differ, your score might look quite different on each report, even if your history is identical. Life at the bottom of the scale is incredibly difficult. For those with a below-average credit score, typically under 460 on Equifax or under 300 on Experian, financial options are severely restricted. At this level, you likely have a history of defaults, missed payments, or perhaps even a bankruptcy or court judgment on your file. Lenders view you as high risk, and most major banks will flatly reject applications for personal loans, credit cards, or mortgages. If you do find a lender willing to work with you, the interest rates are punishing. You might face personal loan rates as high as 19 to 25%, while someone with a great score would pay only 6 or 7%. On a standard $30,000 loan over 5 years, that interest gap alone could cost you an extra $15,000. The impact spreads beyond loans. Many landlords now run credit checks, and a poor report can lead to a rejected rental application even if you have a high income. Furthermore, since 2025, buy now, pay later services like Afterpay and Zip are regulated like traditional credit, meaning missed payments on those platforms will now drag your score down further, keeping you locked out of the traditional financial system. Moving up to a fair or average credit score, roughly 460 to 660 on Equifax or 300 to 499 on Experian, brings some relief, but life is still a struggle. While you can get approved for some loans, your options remain limited. Major banks might still say no, or they may offer you a higher interest rate than the advertised best rates. For instance, an average score might land you a 12% interest rate when the best available is under 7%. At this level, you have very little negotiating power. You essentially have to take whatever the lender sets, paying a premium for the privilege of accessing credit. You are functioning financially, but you aren't yet thriving. Things start to change significantly once you reach a good credit score, which is 661 to 734 on Equifax or 500 to 699 on Experian. At this stage, most lenders will approve your applications, and you gain access to competitive interest rates. This level reflects a consistent repayment history with no major defaults. This is where comprehensive credit reporting, or CCR, becomes your best friend. Under CCR, your credit file tracks the last 24 months of your repayment behavior across all accounts, including home loans, credit cards, and even buy now, pay later services. Every on-time payment acts as a positive marker. At this level, you are in a comfortable position. You can qualify for decent credit cards and car loans at reasonable rates, and landlords will generally have no issues with your rental applications. As you step into the very good territory, 735 to 852 on Equifax or 700 to 799 on Experian, life becomes noticeably easier. You are now a preferred borrower, and lenders will actively compete for your business. This opens doors to the absolute best interest rates, higher credit limits, and more flexible terms. If you are applying for a home loan, you'll likely qualify with multiple lenders, giving you the power to negotiate. Even a small 0.2% reduction on a $600,000 mortgage can save you approximately $25,000 over the life of the loan. People at this level typically have a long history of on-time payments, low credit utilization, and a stable financial track record. This is the sweet spot where your credit score is actively saving you money. Finally, there's the top tier, an excellent credit score, ranging from 853 to 1200 on Equifax and 800 to 1000 on Experian. Interestingly, the national average in Australia often sits within the lower end of the excellent range, though this is skewed by age. Younger Australians aged 18 to 30 tend to have lower averages around 715, while those aged 61 to 70 often average above 930. Your score naturally improves as your credit history matures. At this level, you have the strongest possible negotiating position. Applications are processed faster, and you have full freedom to choose any financial product on the market. Ironically, many people at this level have such disciplined financial habits that they often don't need to borrow at all. They live within their means and let their established history do the heavy lifting. The factors that move your score are straightforward but require discipline. Paying every bill and loan repayment on time is the single most important factor. Conversely, defaults and missed payments are the most damaging. The number of credit applications you make also matters, since every hard inquiry can temporarily dip your score. Your credit utilization, how much of your available credit limit you actually use, and the total length of your credit history also play major roles. Inquiries and defaults stay on your file for 5 years, while serious infringements can stay for 7. Your credit score is not just an abstract number, it's a tangible filter that either opens or closes doors. The difference between the bottom and top of the scale can literally mean hundreds of thousands of dollars in extra interest and lost opportunities. Regardless of where you stand today, you can improve your situation. Start by checking your score for free and reviewing your report for any errors, especially following the recent merger of major credit bureaus. By paying every bill on time, keeping credit card balances low, and avoiding unnecessary credit applications, you can turn your credit score into one of the most powerful tools in your financial life.